Good morning, everybody, and welcome to our conference with the topic of explainable AI, xAI, a conference dedicated to artificial intelligence in finance. And I would like to welcome our guests, our attendees from all over the world who are joining us today for this next few hours, where we talk about how AI is changing our lives, how AI is being implemented in practice across various fintech case studies, and where we will learn from very expert speakers during the course of the day. And I'm very excited to have all of you here on this platform, and you will already probably have tried out, where you can go on this conference hall, this virtual conference hall today, which we set up for you. And just to let you know, so basically you've got a couple of options later on in the breaks. You've got the option of going to the lounge, which is a button on the left side where you can meet all the other attendees. So there's this matchmaking session, which is really fun, where you get matched to other attendees just for 2 minutes, and then you get matched to somebody else. It's lovely, as if you've got a coffee break and you get to reach out to the other attendees at the conference. We also have got the arena, where we've got conference booths and exhibitions booths there. So again, our exhibitors are looking forward to meet you there and to talk to you in the breaks. And what we also will do during our conference, we will show you our latest film about the future of fintech, which is called The Future of Fintech. It's a co-production with ITN Productions and Fintech Circle. We will show you in the breaks a 10-minute showcase. And we will also show at the end at about 12:15 the full hour, 1 hour premiere of the film, The Future of Fintech. So this is our goal for today. What I would like to do now is just to tell you a little bit more about the agenda and what you can expect. So the first thing, we will have a keynote presentation by Martina. Martina is an expert in AI, in ESG, and Martina Macpherson works for Moody's as a senior vice president and is responsible for the ESG and engagement strategy of Moody's globally. And I will welcome her on stage very shortly. Then after Martina's keynote presentation, we will go to a panel discussion, which will be moderated by my co-editor of the AI book, Sean Milley. And Sean will moderate a panel focusing on how AI is redefining the financial services sector. So a very interesting panel discussion, about 45 minutes long, where you will learn about, very exact definitions of our future, what our future will hold. Then we will have about 15 minutes break, which will allow you to join our matchmaking sessions, and I will be there too. So hopefully I can meet many of you in the matchmaking unit. And then we will also show again the 10-minute showcase of the film. And then we will go to our second panel. The second panel will be moderated by Anne Leslie, and Anne will talk about regulation of AI and who is responsible for that, who should regulate AI in finance, how should it be done? And again, with the great members of the panel joining her. And then our last panel discussion, which will be moderated by Ivana Bartoletti, and both Anne and Ivana are also co-editors of mine of the AI book. Ivana will moderate a panel on trust, on ethics, and making sure that when we implement AI, we do it correctly. And that's, of course, the whole theme of the conference. It's about explainable AI, making it transparent. So it's not a black box, and we all know what to expect and how it actually benefits our society, our customers. And we are aware of any negative effects which we need to avoid, which we need to switch off. So that's the agenda for today. And as I said before, in our arena, which again is the button you've got on the left side, we have got a few booths you can visit in the breaks. One booth is from Fintech Circle, where you will find my colleague, James Hodgson, waiting for you to speak to. We've got one booth from ITN, ITN Productions, our team to create this film, The Future of Fintech. And again, if you like to be featured in our second film, which we will work on in 2021, make sure that you visit the ITN tables. And again, to visit it, it's very simple. You just go there, you click on the table, you sit down, literally you sit down, and then the video starts, and you can speak to members of the team. Then also we've got a stand by Moody's. Moody's is our sponsor, and I would like to thank the Moody's team for supporting this conference as our main partner, our main sponsor, and for being such a key player in the fintech ecosystem, really taking fintech very seriously and really helping fintech startups working on these very important topics and supporting our conference today to make sure that we can reach this global audience. And we also have got two more booths. One is from AI Meet. AI Meet is a partner fintech circle hosting this conference for us. So if you want to check and meet them, please do that as well. And we also have got the AI Journal running one booth in the breaks as well, which is a great publication, on AI. So this is the summary, of what we've got for you planned today. And we will finish at about 1:30. This is the end of the film, which we will show you. But with that said, I would like now to welcome on stage Martina Macpherson. Martina is a senior vice president at Moody's, responsible for the ESG engagement strategy, working out of the London office, but being globally engaged, globally responsible, and having 20 years of experience in the sector. So Martina, I'm delighted to welcome you and welcome to our conference today. And I can't wait for your keynote presentation.
Fantastic. Thank you very much, Susanne and team, for inviting Moody's and myself to this exciting event and to present on the xAI conference and platform. Maybe with the brief notes of introduction, I would like to also lead over to the first slides. I hope participants can see them shortly on screen. Exactly, here we are. Susanne kindly introduced me already. Just a few more words on the next slide. As you can see, my name is Martina Macpherson. I'm the Senior Vice President in the ESG Solutions team at Moody's. I'm also a President of the Network for Sustainable Financial Markets and a visiting fellow at Henley Business School in Sustainable Finance. And my work has now taken me over the last 20 years into ESG research, analyses, benchmarks, broadly products, research and innovation. And clearly it has also brought me to the topic of AI and fintech. I've been researching this area quite extensively. I've been contributing with a co-author last year to the AI book, which was launched by the Fintech Cycle and Wiley. And ultimately, what I'm trying to explain today is when and how the areas between ESG, data metrics, AI and fintech coincide, and when and where there might be further areas for opportunity to utilize technology as a strategic enabler. A brief look at the next slide will highlight the work we undertake in ESG, especially in ESG solutions, but also beyond at Moody's. It's fair to say we have two main categories. We look at environmental, social, and corporate governance information as integrated parts into existing methodologies, up and foremost, of course, credit ratings. We also have climate risk data and analytics within the Moody's Analytics business. And we have established over the course of this year a new function called the ESG Solutions Group, and we specifically look at ESG and climate measures. We look at sustainable finance solutions, from ratings to second-party opinions for green bonds, to ultimately assessments for bonds and loans in the sustainability space. And we also look at ESG peer comparisons / indices. This means ultimately we are now trying to shift and balance the approach from integrated ESG towards standalone solutions. And we are helped in this effort by two affiliates that are quite renowned in this space, VE, formerly Visio Iris, and 427. Again, VE has more than a 30-year track record in collecting and assessing ESG research data and information. I should also highlight in the Moody's Analytics division, we have developed a suite of screening tools using AI that actually connect data and provides ESG compliance-led insights into the world of financial, but also non-financial data. And some of the discussions we had previously over the course of this year, also with the Fintech Circle, where my colleague Ashit Talukdar, who is a former rocket scientist at NASA, where he highlighted the work we're doing, it became very clear that we are really trying to, on the one hand, screen large amounts of information, and we, on the other hand, trying to align data points to provide really the integrated solutions for ESG and beyond that we need to actually have relevant and material insights for data, for decision making, and ultimately for investment products. And to highlight here as well a more recent development, very exciting, in November, we announced that we had acquired a minority stake in Myotech. This is a provider of alternative data and analytical tools in ESG and know your customer markets in Greater China. This is obviously an important development from multiple angles, given that the Asian markets offer a great set of opportunity, but there's also still a lack of access to transparency and insights / information, especially when and where environmental, social, and corporate governance data is concerned. So Myotech uses AI to track and scan alternative data sources to ESG and KYC factors to actually also get a broader understanding around the issues and remaining controversies in broader supply chains, and to actually provide us with financial and non-financial information of around 800,000 public and private companies across China. And what is helpful here, and this is what we will discuss a bit later on today, the AI algorithms will help us to detect vulnerabilities of companies, so-called controversies, by monitoring news flow, social media, any type of disclosure in the public domain, and help us to actually capture this information in real time. And we are aiming over time to really incorporate Myotech's alternative data and product offerings to streamline all of the analytical processes across business divisions that I discussed, and to monitor portfolios to better inform our risk assessments, to accelerate product developments, and to deepen our overall coverage of China. And with these exciting developments, most recently here at our own door, I would like to quickly lead over to the next slide to set the scene and the context on AI and systemic ESG risk management. To open up here and to summarize, I would like to touch on 5 key developments that really drive ESG data and the implications for AI and fintech. First of all, the 4th industrial revolution has already begun. That means we are seeing a fusion of advances in artificial intelligence, in robotics, the Internet of Things, 3D printing, genetic engineering, quantum computing, and other technologies. And as Klaus Schwab, the founder and executive chairman of the World Economic Forum, who coined the term 4IR, summarized, this sort of age now is, on the one hand, the age of transparency. On the other, it's characterized by a fusion of technologies that are blurring the lines between physical and digital and biological spheres. And this type of development, supported by AI and fintech, is literally expected to disrupt every industry. The journey to digital transformation is at 4IR's core. And that ultimately means that decision makers and analysts aim to make everyday processes simpler and more efficient. It also means that we are seeing innovation and obviously new developments for opportunities when and where products and business models are concerned, but we are also seeing certain boundaries in relation to regulatory obligation. And ultimately, that means that trusted governance, data, and information frameworks have a key role to play, ensuring that information architecture is business ready and ensuring that data scientists are empowered through data governance. A note here, when and where the lines of ESG play an increasingly large role. ESG investing is here to stay, and demand for passive factor-led strategies is accelerating. The sustainable fund market has reached a new milestone in the third quarter of 2020 with almost $1 trillion of assets under management. And that's ultimately an impressive feat when it's viewed against the backdrop of the COVID-19 crisis. It also means when we are looking beyond boundaries that data complexity management in our field is part of the journey toward systemic ESG risks and opportunities management. And there is a need for better ways to align information and to get through the complexity of ESG research as a systemic risk and opportunities analysis. Because ESG research analyzes how, for instance, companies manage risks and opportunities effectively, how they build back better and showcase levels of resilience. And ultimately, ESG research in itself is a complex understanding, and hence it requires, for the large amount of structured and unstructured data, the relevant tools to actually align information, to establish rules-based approaches, and to map them against frameworks, and we're touching on these a bit later on today, that actually enable us to get, on the one hand, the relevant insights, on the other hand, to define what is material for a financial and an extra financial assessment and an investment making decision process. And lastly, that brings me to the point, AI, Fintech, and ESG have also multiple implications for the investment community. And as ESG investments accelerate and the sheer growth in this market is taking off and is showing clear momentum, AI-driven sustainability data strategies offer the opportunity to create critical levels of insight, transparency, and provide a means of timeliness and a new means of subjectivity to actually assess the relevant data points and inputs. But this also means that investors must continue to look beyond current sentiment and potentially multiple signals that could create a specific area around sentiment analysis, and continue to look also at the corporate fundamentals when and where companies' issues related to ESG are concerned. They need to continue to assess very deeply the relevant policies and procedures and governance mechanisms that organizations have in place to really get an overarching insight into how to measure stakeholder impact of the company's activities. And that brings me to the next slide, looking a bit deeper at ESG and sustainable finance and how momentum is building. I highlighted the inflows into sustainable investment funds. I also wanted to showcase very briefly again that momentum is building across policy and markets. And as you can see here on the left, members of the sustainable finance capital markets community, not just the investors, are also growing. They include central banks, for instance, the NGFS network. They include banking networks such as the Sustainable Banking Network here on the slide. And collectively, these organizations, membership groups, try to drive the development of sustainable finance policies and climate risk mitigation and adaptation frameworks globally. So that ultimately means that commitments towards ESG, again, across the board are rising. And just to highlight here, two important developments, the Principles for Responsible Investment, the so-called PRI, has now more than 3,100 signatories, representing a total of 110 trillion US dollars in assets under management. And another group, the UNEP-FI Responsible Banking Principles, have now almost around 200 signatories. So banks globally that are committing to implementation of ESG at a strategic, a transactional, and at an operational level. And they include roughly 132 founding members, banks that are representing 47 trillion US dollars at inception, and across 49 countries. So with these sheer figures alone, it is interesting to see how and where ESG and sustainable finance is performing and continues to grow. And that development is clearly supported by, especially here in Europe, but also increasingly in Asia, by the developments in policy. Since 2014, the European Commission has required companies with more than 500 employees to regularly disclose information on environmental and social issues. This is the so-called EU Directive 2014-95. This requirement also applies to financial institutions, such as banks and insurance companies, as well as asset managers. Next year, this directive will be extended with the launch of the Non-Financial Disclosure Directive and its equivalent for investment management or in financial services companies, I should say. And what has happened here is that since June 2019, the European Commission's Technical Expert Group unveiled a taxonomy for sustainable activities to define environmentally sustainable economic activities for policymakers and financial institutions to help them identify green investment opportunities. The taxonomy, as well as other activities under the Sustainable Finance Action Plan, such as guidelines on climate-aligned benchmarks, the disclosures we highlighted, disclosures as well for ESG for benchmarks, as well as a green bond standard, were all launched, introduced over the course of this, and as I said, into next year. And that means we are now seeing an increasing effort by policymakers to align with market developments. And over the course of this year as well, we have seen products coming into market in alignment with the new taxonomy, for instance, such as a new climate awareness bond issued by the EIB. And we will probably see many more climate and environmentally focused, but potentially also socially linked products, especially in the COVID context. And they will literally link back to the building blocks that have been established within this policy framework. And a side-by-side movement with this is as well that in Europe, the European supervisory authorities and central banks all have issued guidance documents on sustainable finance over the last 18 months. And having been involved most recently in these discussions in Asia Pacific, Singapore, Hong Kong, other jurisdictions are closely following this development. But what are the remaining challenges, and when and where can AI help? So if I'm leading over briefly to the next slide, just showing the current conundrums that persist in corporate sustainability reporting up and foremost. You can see on the slide here that 90% of S&P 500 companies publish CSR reports, have published them here on this slide in particular in 2019. But multiple questions around asymmetries and information biases remain, especially when and where ESG information disclosure, reporting, accounting, but also ratings and decision-making is concerned. And the sheer multitude of frameworks and standards we are seeing in this space, you just see 3 here, GRI, TCFD, and SASB. There is a much broader array of standards and frameworks out there. And this type of pluralism has led to reporting fatigue at a corporate end on the one hand, and to increasing confusion when and where decision-making is concerned at the investors, the other end. So this means that we see still challenges and questions around definitions of materiality. Are we talking about financial, dual, or dynamic materiality? There's confusion around the types of standards and how these can be aligned, even though increasing efforts, especially in this space, are being made around alignment and standardization of information. But there's also still a challenge around the comparability, consistency, and even clarity of this information, especially when we look at different time horizons, scenarios, and across different types of reports where sustainability information is disclosed. And there definitely still, as I highlighted, gaps for forward-looking perspectives. And that is becoming increasingly challenging given that in ESG, we are not just looking at past performance as an indicator for the present and potentially future. We need to have this type of real-time information to get an insight into ongoing controversies and to see and understand when and how they might persist, and when and where they might build a pattern over time that might lead to a potential controversial act and governance breach in future. So with the next slide, I'm quickly showing you what this ultimately means. It means that ESG ratings agree to disagree. And that means there are multiple biases when it comes to ESG disclosures. We discussed this, but when and where and how is this happening? So first of all, there might be biases at source. It depends when, who, and how information is being disclosed by corporations. Is this a CSR report? Is this a sustainability report or an integrated report issued by the CFO office? And again, highlighting here, is the report based on financial materiality? Does it include a broader stakeholder context in the shape and form of a dual materiality? Or is it even looking at a broader context as well? And this is what we classify as dynamic materiality, a context that can constantly change. And clearly it depends on the setup, structure, environment, operational conditions. And ultimately, beyond the corporate biases that are being created through the different type of sources, we are also seeing that criteria and methodologies / weightings of scores at the ESG research and rating end clearly differ. And last but not least, to add to this, increasingly investment decision makers are taking raw data points. They're no longer depending or just taking in scores from 1 or 2 assessment providers and basing their decisions around these type of existing frameworks. They're taking multiple inputs from multiple providers, and hence that leads to different type of outcomes. Again, I just want to highlight, it doesn't mean that this is a negative development, because not every size fits all. As we said earlier, we should look beyond sentiment. We should undertake a fundamental analysis of corporations and their efforts. And we should look at fundamental versus thematic and factor-based strategies. And they clearly, by remit, will lead to different outcomes. But just to highlight here, the current divergences that we are seeing in scope, weight, and measurements in the ESG research and ratings field have led to the fact that ESG ratings are currently correlated at around 61%, versus credit ratings, if you compare Moody's and Standard & Poor's, for instance, are correlated at around 99%. And this brings me to my last slide on AI, Fintech, and ESG, and what we need to do to establish new frontiers. So there is enormous potential for artificial intelligence, blockchain, and fintech technology to ultimately identify, measure, and standardize ESG data and information. The combination of AI with relevant ESG frameworks and metrics can enhance data consistency, reliability, and transparency, and it allows investors and corporations to understand and mitigate risks and to better establish resilience and identify new opportunities. And just to highlight again, when going through the process of aligning and triaging different ESG data points and inputs, we are constantly asking ourselves a few key questions when and where non-financial information, intangible information is concerned, and around the benefits of AI and fintech. So first of all, we are looking at what's the importance of ESG data in understanding the value of a company's tangibles versus intangibles in its specific context. And just to highlight how important the analysis of intangibles has become, in 2015, we looked at around 85% of companies' worth being linked to intangibles. If you compare this with a 1975 number, the market value of large caps was mainly linked to tangible assets. And ultimately, that means increasingly focusing on intangible assets such as reputational management is actually a key aspect to understand a company's valuation and to link the missing dots. And that means we are also asking ourselves, when and where do we see remaining challenges, when and where triaging of information is concerned? And this is up and foremost when and where we talk about trusted data, ESG data, and governance processes. And hence, building the relevant frameworks and linking them and bridging information with new inputs. As I highlighted earlier, this is why we are constantly identifying new potential data areas, is one aspect to overcome and bridge these type of gaps, and to then ultimately work with others to verify and ensure information is a constant process. And we have uncovered that AI can help us, and fintech solutions can help us to uncover hidden risks and trends. But one thing we are also very clear about, green and social washing remains a challenge. And it comes with the inherent biases that we have just seen of self-disclosed, annualized, and backward-looking information. So we need to work jointly with the market, and that's what we do through collaboration, through working groups. I'm part of a council, for instance, the Enterprise Data Management Council on ESG and data AI, to ensure that we are working collectively for the relevant solutions that the market needs to see. Lastly, I also like to highlight that we need to continue working on this journey with other experts across this sphere here, with market participants, to really identify the needs that they have in order to make sure we are providing the relevant data, solutions, and assessments for the future. And ultimately, identifying, classifying, and interconnecting all ESG issues remains a challenge, especially because there is a lack of a defined ESG standard and terminology, as I highlighted earlier. But we can work together, we can work through AI, fintech, and analyses to really uncover some of these biases and to ensure that we are triaging information that's becoming relevant and material for future assessments and decision making. So with this, I'm handing over to Susanne and James.
Fantastic, Martina. Thank you so much for this exciting presentation. Really eye-opening. I think what is happening already in the space of ESG and finance and fintech, and how Moody's takes this role very seriously and really is cutting edge in terms of what your solutions are, which you offer already to the investment community. With that said, I would like to now invite us to move to our first panel, which includes Martina, and which will allow all of our guests as well to ask questions to our panelists. I've seen one from Richard Saldander from Oxquent already. He asked a question. We will answer that, as part of our first panel discussion. And what I would like now to invite Martina and myself, so we go to the other stage, to our panel discussion, and for our guests, just wait fast for a few seconds until we move basically to the other stage, and we open up our panel in about a few seconds on the other side. So I see you very soon, and please stay here on this stage for you guys, and we just move on to the other room. Thanks very much, Martina.